Ever wondered a very small chapter is like a tiny cousin, or after playing cricket in a season ball game, playing cricket on a tennis ball match? Guys, how easy does it feel? And this chapter is as easy as that. So, if you're looking at completion of DT, the last chapter in DT is a chapter which is very tiny. In fact, this video, when you watch today, even after that, even in revision, and even one day before the exam, you can watch this video. It's a very tiny video and covers the entire chapter with handwritten notes and with all the possible sums, including exam sums. I'm talking about a chapter called Return of Income. My name is C.S. Auramutha, and I'm trying to simplify this chapter in such a nice manner because this chapter is found every time there is a CA Inter exam. So CA Inter May 24 students, when you go for your exam, the last question, that is question number 4, one of the parts will be return of income for a probable prediction of 4 marks. So that's my prediction. May 24 return of income will be for 4 marks. What is this chapter all about is what I'm going to explain. How will we go about it? I will first explain you the concept and I will take you through my quick book. My quick book is a very shortened version of the entire book. So I'll take you through my quick book. I'll explain the concept. I'll open the handwritten notes. I'll pause it there, or you can pause it there and copy the handwritten notes. Or alternatively, if you are my student, then you have the drive link to copy those handwritten notes. And once we are done with the entire chapter, then we will go to every possible ICAI material question, the illustrations, and also to the exam questions which have come from this chapter, because this chapter comes every year. So breaking that coconut and starting a brand new chapter. Congratulations, unlocking 4 marks from this chapter called Return of Income. Now, what exactly is return of income? Let's try and see what exactly is this chapter and how do we go about it. So what is this chapter called Return of Income? And are the sections important? Yes, I will teach you the sections as well. Now, just like in college, when we give your exam, when you give your exams, when you have attendance, etc., at the end of the year, you get a report card. Of course, that report card can get very dangerous, but that report card has to be given, of course, is given to you. Then you to show it to your parents, and they get to know what exactly happened with you in your college life. Same way in DT as well as or Income Tax Act, under the Income Tax Act 1961. The whole year goes by. That's called the financial year. The financial year, which is your exam year, is financial year 23-24. In this year, you've done a lot of stuff. You've determined your residential status. Then you had incomes from any of the 5 heads of income or all the 5 heads of income. Then there is clubbing, set off, you've taken deductions, and finally, you've come to a number called the total income. And on that total income number, you've calculated your tax liability and you've decided that this is my tax liability. This is what happens during the financial year. But this is something that you know, this is something that your CA knows, but this is something the government wants to know. So they say, listen, let the year get over. So the year gets over on 31st March. So we have no hurry. Let the year get over 31st March 2024. Once it gets over, now, do you know what happened in the year? So please file a return of income. That's also called income tax return. It's also popularly called ITR. The government tells you that, listen, please file your ITR and tell us what happened, what incomes did you earn, what deductions did you take, what are your losses that you want to set off, what are the losses that you want to carry forward. Tell all of us, all of that to us by filing something called return of income, also called ITR. So this is what the chapter is all about. Uh, in this chapter, you will learn the first thing, that who needs to file the return of income. I file my return of income. All these Yashas Academy, Pinnacle Education, all these file the return of income. A lot of people file, but you as a student may not be filing the return of income. So who needs to file it? We'll figure in this chapter. When do you need to file it? Is there a due date by when you need to file? What if you get late? So is there a provision for that? What if, like many things in life, you want to change it? Can you change it or can you revise it? All of that and more will be covered in this chapter. So let's start. And the section also I'll make you by heart. The first thing where we'll understand that who needs to file the return of income. So this is what it is. Who needs to file the return of income? I'll tell you the section later on, but right now focus on the concept. Is the first category or the first shortcut. The shortcut is compulsorily or compulsory to file. These two people, it's a shortcut. As you know, these shortcuts help you memorize it. Compulsorily or compulsory to file. These two people have to compulsorily file the return of income. Yes, whether they have zero income or loss or whatever it is, they need to file the return of income. And this is COMP for companies and F for firms. So companies and firms. Any company, private limited, public limited, one person company, any company in India, whether they're doing business or not doing business, whether they have a profit or loss, they need to file return of income. And any firm, partnership firm, and when I say partnership firm, I also mean LLP, they need to compulsorily file return of income. So there can be no year where they will not file the return of income. So that is something that is compulsory for them and they have to do it. That is the first category. But for me, let's say I'm not neither a company, neither a firm, I'm an individual. Should I file my return of income or not? So for all the others, they have given 3 questions. And if any of these 3 questions are applicable to you, then you need to file the return of income. All right. So fair enough. In the exam, they say company or firm, then don't even have to look anything, compulsory to file. And others, example like you, like me, like our HUF, etc., do they need to file the return of income? We will see. In A, they give you a formula and they say if your income is more than your basic exemption limit. If you remember, guys, BEL basic exemption limit for people who are below 60, it's 2.5 lakh. 60 or more, it's 3 lakh, and 80 or more, it's 5 lakh. If your income is above that limit, there's a formula. This income, I'll tell you what it is. But generally, if you have a sizable income, example, right now, as a student, you don't have too much income, so no return filing. As an article trainee, let's not joke about it, the articleship stipend. But again, there it's not too much of a stipend. So let's say 10,000 rupees a month. That's into 12, 1 lakh 20. Again, that's not more than BEL, so you won't have to file a return of income. Yes. Now, what is this income? This income should be total income, right? No. I told you there's a very useless number which only finds use here is this. If your gross total income, yes, you heard it right, that number which is a very useless number before deductions under chapter 6A, that gross total income, if that income plus the 54 series of exemptions. Now, let me take you back to capital gain chapter. In capital gain chapter, if I sell one house and I make some capital gain, but I buy another house, that capital gain gets exempted under 54 house for house. Or if you remember family assets, example 54F, I'm selling my jewelry or my shares and buying another flat. All that exemption, the entire 54 series, Baron, 54F, 54D, any of these have to add both these numbers. And if that total is more than your basic exemption limit, then you have to file your return of income. Let's check. You as a student, what's your gross total income? Maybe zero. You have only expenses. What is your 54 series? Zero. So you don't have to file a return of income. Let's talk about someone who does not have too much income. Let's say his income is 12 lakhs. But will he have to file his return of income? Yes. Let's say his income is only 2 lakhs. He will not have to file, but let's say he sold a house on which he had a gain of 50 lakhs and he bought another house because of which he got an exemption. So if I add both of this, it becomes 52 lakh. Now this guy will want to file his return or have to file his return because the government wants to know who are these people who are getting these 54 series exemptions. That's A. So if you meet this, then will you have to file a return of income? Yes. You don't have to go ahead, but if this does not apply, then B and then C. Any of these conditions get fulfilled, you need to file a return of income. Let's recap. Guys, who needs to file the return of income? Companies and firms need to compulsorily file it. The others will have to see one A, B, C. A is simple, it's a formula. GTI plus 54 series exemptions. If that is more than your BEL, then you need to compulsorily file your return of income. Let's now move ahead to the B part. I'm drinking coffee, and for a weird reason, they said that listen, if you really like coffee, again, that means if you like coffee, the government says you need to file a return of income. Of course, that's a very stupid thing, but as it's a shortcut, you know me and you know my shortcuts. So coffee is a shortcut. If any of these 4 conditions are fulfilled, you need to file a return of income. What is coffee? I'll tell you. See, for current account. If in your current account, you have put money in this year, if in one or more current accounts, you put money more than 1 crore rupees, then we want to know who you are, file a return of income. If on your foreign travel, if on yours or anyone else's foreign travel, you have spent 2 lakh rupees or more, then we want to know who are you, file your return. If on electricity expenses, example, your house electricity, you spend more than 1 lakh rupees, then the government wants to know who you are, please file a return of income. So these are people who are not filing the return of income, but their transactions are big. So the government wants them to file the return of income. C is for current account deposits more than 1 crore, foreign travel expense more than 2 lakh, and electricity expense more than 1 lakh. If this is the case, you need to file a return of income. So what is this O here? The O says that if you are someone who has assets outside India, O is for outside India. If abroad you have assets, yeah, we are basically trying to make assets in India, but there is someone, let's say, who has assets abroad, a house in New York, shares in London, an apartment in Japan. If you are someone who has assets outside India, and assets could mean anything. It's the same definition of MISB SAT-JAW. If you know this definition, this is the definition of property. If you have any property abroad, then why are you not filing a return of income? We want to know who you are. Please file a return of income. So it's for outside India. Um, but guys, outside India, a lot of people already have assets. Example, the uncle who stays in the US, will he not have assets abroad? Yes. So this outside India does not apply to non-residents. It only applies to ROR. That's why the star mark. This outside India applies only to ROR. So if an ROR has assets outside India, the government wants to know who they are and they need to file their return of income. That is for outside India. All right, just some more light on this outside India. Now, let's say you as a student, you went to do your MBA abroad, you went to Singapore to do your MBA, and then you came back to India. But by mistake, you have a Singapore bank account, and in that, let's say 10, 15,000 rupees are there. Now, is that asset outside India? Yes. But the government says that we understand your problem. So up to 5 lakh rupees, if you have bank account money abroad in any country, collectively up to 5 lakh rupees, then don't worry, that will not be considered as an asset outside India. So in the exam, they say you have a house in New York, file a return. Of course, only ROR. If you have shares abroad, file a return. If you have bank balance of 15,000, don't worry. If you have bank balance of 4 lakh, don't worry. But 4 lakh in one account, 4 lakh in another, 8, yes, you need to file a return of income. This applies only to ROR. And asset outside India would also mean being a partner in a partnership firm abroad. That's called financial interest in an entity abroad. So that is C. A is its formula. B is coffee, current account, outside India asset, foreign expenses, foreign travel expenses, and E is electricity expense. And this is a new entrant. It's a rule called Rule 12AB. This was introduced recently. And they said that again, 4 more conditions, but very easy shortcut. Business and profession saves TDS. If any of these conditions fulfill, again, the government wants to know who you are, file a return of income. So if your business turnover is more than 20 lakhs, if your profession turnover is if your business turnover is more than 60 lakhs, if your professional turnover is more than 10 lakh, example, if you're selling laptops more than 60 lakhs, example, if you're a doctor and having business more than 10 lakhs, if in your savings account you deposit more than 50 lakh in a year, if someone has deducted TDS for you more than 25,000 per annum, then the government wants to know you are important. A businessman 60 lakh, professional 10 lakh, saving account 50 lakh, and TDS of 25,000, then you are important. Someone is earning a lot of income and hence they want to know who you are. Only thing is this 25,000 is 50,000 per annum of TDS, TCS, etc. In case of a senior citizen. So I'll repeat, business and profession saves TDS. So if you're into business or a profession, or if you're in a savings bank account, you deposit a lot of money, or you have TDS in a year of more than 25,000, not you have deducted, someone else has deducted while paying you. Remember, TDS payer in the middle, when they're paying you, they've deducted TDS of more than 25,000 or 50,000 in a year, then the government wants to know who you are. As this is the first section, the most important one, who needs to file the return of income. Let's take a couple of examples and let's see who needs to file the return of income. Let's take your example. Will you need to file a return of income? Compulsory to file. No, you're not a company, not a firm. Your GTI plus 54 series is not more than that. You like coffee, but not this kind of coffee. So it's not current account more than 1 crore. You're a student. So you don't need to file a return of income. But let's say you become a CA. And as a CA, you start your own firm. Then as a firm, will you have to compulsorily file? Yes. But what if it's a proprietorship firm? What if it's not a partnership firm? It's an individual. Then you'll have to see if you fulfill any of these conditions. Yes. Frequently questions are asked on this section. The section is 139.1. Who needs to file the return of income in India? So from today onwards, if your friend says, listen, should I file my return of income or not? Ask him, does he like coffee? Ask him, does he like business and profession save TDS? Ask him if he fulfills that formula, GTI plus 54 series exemptions. So if it's more than well. We'll be doing questions on this, but first we'll understand all the concepts. Next, okay, who I got to know. I need to file my return. Saurabh Mutta, I'm a chartered accountant. I need to file my return of income. But when should I file my return of income? That's the next question. And that question is answered here. There's a shortcut called John. We've used this shortcut in many chapters before. John is our good friend because we've used this shortcut really well. John basically means 31st July. If you need to file your return of income, let the year get over. The year gets over on 31st March, because only after the year gets over, you'll know how much you earned. So after 31st March, you file your return of income by 31st July. Example, let's say your father is a businessman, a small businessman. After March, April, May, June, July, he gets 4 months to gather his books of accounts, to calculate how much tax he has to pay, and then pay his tax and file his return of income by 31st July. Is that default? Yes. Imagine most or everyone has to file on 31st July. But then some people didn't like this date. It was too soon. And they said that, listen, we are a big fish. If you remember who's big fish, big fish is someone who needs to be subject to an audit. Example, who is subject to an audit? I'll remind you, if there's a section in that, forget the section, but the concept was that if in business your turnover is more than 1 crore, if you remember, if in business your turnover is more than 1 crore, and in profession, if your turnover is more than 50 lakh rupees, remember that 1 crore has now become also 10 crore if your cash transactions are very low. So if you're a big fish, that means your turnover is more than 1 crore or 10 crore in business and more than 50 lakh in profession, then the government says, listen, you need to go to a CA. And if you need to go to a CA to get themselves checked, 4 months are not enough. So these are the people who went to the government, and government, we are big fish. We need to go to a CA, stand in line, get our accounts checked, etc. It takes time. So April, May, June, July are not enough. We need some more months. They said, okay, August, September, October also given to you. So you can file it by 31st October. So J is for July, O is for October. And at CA, finally, you'll see international transactions. For those people who engage in international transactions, the date is 30th November. So this is the idea. This is the concept of John. Nowhere else you'll see these kind of shortcuts which will help you remember always. Of course, if this they change, then we'll have to change the shortcut also, because earlier it used to be JSN. The shortcut is different, but it was earlier September, which now they made to October. I want to thank the finance minister for doing this so that we have a nice shortcut in the name John. Now, there was a little problem here. I'll tell you what the problem is. Let's say there's a partnership firm. As you know, partnership firms need to file the return, and it's a big fish. They're a big partnership firm, so their due date will be 31st October. They have many partners. One of the partners is a small fish. So his date will be 31st July. But there's a problem here. The small fish that is a partner is saying that, listen, I can't finalize my income unless the partnership firm tells me how much salary they are paying me, how much interest they are paying me. And if you remember from PGBP chapter, a partnership firm can pay interest only up to 12%. So he's saying that I need to wait for the big fish to finalize, only then I can finalize. So I can't finalize earlier. Hence, the government told that, listen, if your partnership firm is a big fish, then all the partners by default will also become big fish. That means if the partnership firm is a big fish, all the partners will have to file their return by 31st October. So they get additional time. Yes. This is what now you will read from the quick book. This both are section 139(1). Return filing is compulsory for companies and partnership firm, compulsory to file. For others, ROI filing is needed if GTI plus 54 series exemption is greater than BEL, or in the following cases, which is coffee. And then a new rule 12AB, where business and profession saved TDS. ROI to be filed within the following dates: July, October, November, that is John. That shortcut, I'm just going to update it here. Of course, the shortcut is known, so often we have used it. And in case of partnership firm, which is subject to audit, that means it's a big fish, then even the partners, all the partners, whether working partner or sleeping partners, all will file their return only by 31st October. That is, big firms will rise to big partners. This is CA illustration, which we will do once you open up questions. There's an exam, there are exam question and an RTP question from this concept that we will see in some time from now. This is section 139(1). Please remember the section of this chapter, very, very important. All right, time to move ahead. I'm just showing you the return of income handwritten notes. And if there is any change to be done, we'll do the change right now. Return of income, as you know, the importance is 5 on 5. Sections 139 and 140 majorly are from this chapter. That off is flying away. Anyway, section 139.1 is what we need to write first. This is talking about who and when. Companies and firms, GTI plus 54 series. Coffee is also mentioned here. Just 1 second. Looks like there's some problem with that sheet, but anyway, you can use the handwritten notes link. In the video, I will also attach the link for those who don't have the link, and you can copy it from there. There's a folder, and you will see these kind of 6 files, and these 6 files have to be copied. People who see the number of files and they get scared, guys, it's only 6 files. All right. Now we move to the next one, and guys, this is a very small chapter. The recording has been going on, and in some time the chapter will be over. In fact, the biggest part of the chapter is already over. That is who needs to file the return of income and when do they need to file. So the next is, what if I made a loss? Do I need to file a return of income? Example, in business, you made a loss and unfortunately you need to file a return of income. Do you file it with a different ink, red ink, etc.? No. They just call it a loss return. They say, we'll just call it a loss return and we'll give it a separate section called 139.3. It's nothing different. It's the same return, but now instead of a profit, there'll be a loss. This loss can be set off and it can be carried forward. You try to set it off during the year, or else you can carry it forward. But guys, this loss return, you have to file on time. If you remember from a chapter called set off and carry forward of losses, if you want to carry forward the loss from 23-24 to let's say 24-25, then in this year, you need to file your return of income by June. What if I'm late? If you are late, then that year, the year you made the mistake, that year's losses cannot be carried forward. You can set it off. Previous loss can be carried forward, but that year's loss in which you've done the mistake, that cannot be carried forward. That's why a loss return has to be filed by June. In fact, if you're a CA and you have 2 clients, one is someone who has a loss return, handle him first, because if he's late, it'll be a lot of problem if he does not file his return on time. So loss return, section 139, you need to file a return of income on time. Otherwise, those losses of that year cannot be carried forward. But there is an exception, and the exception is HD. These are 2 losses where the government is okay with this loss. In fact, they're happy you made this loss. And hence they say, and we've done this before in chapters called set off, and hence they say that these 2 losses can be carried forward even if you file your return late or if you not file your return also. What is the first loss? The first loss is loss from house property. You bought a house, you're paying interest, you have a loss, the government is okay with it. And the second is unabsorbed depreciation. You have so much depreciation because you bought so many assets, the government is very happy with it, and hence these 2 losses can be carried forward even if you've not filed your return on time, or even if you've not filed your return only. That is the next section, 139.3. Let's read it from our quick book so we get a nice idea. In order to carry forward losses, the return of income for the said year has to be filed within the above due dates, else losses will not be allowed to be carried forward. The same thing we have done in a chapter called set off. Exceptions, UAD, loss from house property. Of course, whatever is UAD, the same impact is given for scientific research and family planning expenditure also. There's another question from ICAI material, which is here. I've referenced it, so this quick book is very helpful for those people who want to use it instead of handwritten notes. Next. Guys, we are always, either we are that person or we always know someone who wishes on birthdays late. Yeah. Imagine I'm that person who wishes people late. You know the person's birthday is today, you forgot it, it's your good friend, you call him tomorrow. Is he going to be feeling bad? Yes. But can you do that genuinely? Yeah, why not? So same way, if your return of income is not filed by July, October, or November, example, your due date was 31st July. But on 31st July, you were out, you were celebrating, you forgot, your CA forgot, then what? No problem. The government says, listen, you can file a belated return, so don't worry about it. And this is something that is possible. So even if you forget to file a return on time, don't worry, you can file it late. That's a good thing. Yes, it's a good thing. It makes people give a sense of relief that even if they miss the deadline, they can file it late. But how late? The example, the financial year is 23-24. It got over on 31st March. How late do I need to file? July is already over. Can I file after 10 years, 15 years? The government says, no, you can't do that. Late means there has to be a proper, late also has to be within some time. So they say that once this financial year is over and the assessment year starts, Your due date is July or October or November. You can file it belated, but you can file it by 31st December only. That means if you are late, then it's okay, but you can't file a return 7 years, 8 years late. You need to file by 31st December of that year. So this is the year 23-24. This is called the previous year. This is called the assessment year. And in the assessment year, the maximum late you can be is till 31st December. All right. So if late is an option, why would people file on time? Guys, if you could file your exam form late, then there's a small extra fee that you need to pay. Same way, if you file your belated return, then there are 4 repercussions in the shortcut called lift. So filing a return belated, is it possible? Yes, but there are 4 repercussions, and this is the repercussion which you will understand. Guys, if you all remember, in India, only one thing applies, that is punishment. If in class you come late and people collect fine 50 rupees from you, you will never be late. If you start spitting or throwing things on the road and there are people who catch you and charge you a fine, you'll never throw things on the road. Same way here also, there's a small fee that you need to pay. If you file your return belated, you need to pay a fee, which is called a late fee of 5,000 rupees per return. And this is the reason people don't file the return late, they file it on time, because who's going to pay 5,000 rupees per return? Next, you cannot carry forward your losses, which you already know if you file your return late, except those 2 losses, HD, you cannot carry forward your losses. That is a big impact. Next, whatever tax is remaining to be paid. What do I mean by this? Let's say your total tax liability was 1 lakh. Your TDS out of that has been 20,000. Your TCS, advance tax, etc. has been 40,000. And let's say your TCS has been 10,000. So overall, you paid 70,000. Now the remaining is 30,000. This is something you'll have to pay while you file this return. And because you owe the government this 30,000, you will also have to pay interest, guys. The government is almost like a money lender. If you don't pay them on time, they will charge interest. You will also have to pay interest here. So these are 4 repercussions of filing your return late. This is the very, very highly probable exam questions. That what are the repercussions of filing your return of income late? First, L. Losses will not be allowed to be carried forward. Next, fee of 5,000 rupees. This fee has a section 234F, and the shortcut is F for fee of 5,000 rupees. But guys, is 5,000 rupees a little too much? I feel yes. If you're a family of 7 people, 7 into 5, 35,000 rupees, you couldn't buy a TV in that much. So hence the government says that listen, this 5,000, we don't mind reducing it to 1,000 if your income is also low. So if your income is low, then your fine also becomes low. If your total income is up to 5 lakh rupees, that means your fine will also be low, that is 1,000. And interest is only linked to tax. So only if you have to pay some tax. If you don't have to pay any tax, then there'll be no interest. Only if you're supposed to pay any tax, example 30,000, then on that you need to pay interest at the rate of 1% under a section called 234A. Oh, what is 234A? Let me recap you. Guys, there was a relay race. First C runs, then B runs, and then A runs. Let me recap. C runs in the previous year 23-24, and he checks 234C. This is. He will check you 4 times whether you paid the installments on time. Otherwise, he will charge interest at the rate of 1% per month or part thereof. Next, after the previous year gets over, if some tax is still pending, then 234B will charge you interest again, same rate, yes, 1%. And how do you understand this best? This is understood best in the manner of thinking the government is a money lender. You owe the government some money. Until you don't pay the government the money, they will continue charging you interest at the rate of 1%. So 234B runs till June. Let's say you had to pay 30,000 and you file your return in the month of April. So 1 month's interest, May, then 2 months, June, then 3 months, July, then 4 months. And if still you don't pay and later on you pay late, then 234A will continue to run till you pay the government. Again, interest rate is the same, 1%. Guys, all this has been done. 234C, B, and A has been done in a chapter called Advanced Tax, but I'm still recapping it because it is live. So just recapping, belated return, how can you file it late? Yes, in India, generally people file their return 4 months late. That's a shortcut for 139.4. Can you file your return late? Yes. By when? By 31st December of that assessment year? Yes. 4 repercussions lift. Losses, interest, fee, 5,000, 1,000, and TS tax. But let's say the officer was expecting your return by 31st July. You did not file your return, and your name was very similar to Vijay Mallya's name and surname both. and he felt a little curious that he would not filed a return of income. So in the month of August, September, October, November, etc., he sent you a love letter that, listen, Mr. A, Mr. VJM, we want to know why you have not filed a return and we want to assess you. And that, let's say, example, the assessment happens in September. Then you cannot tell him that, listen, I have time till 31st December. No. So can you file a return late? Yes. You can file it by 31st December. But if they choose you for assessment, they generally don't choose so fast because the government, they don't work so fast. But if the assessment happens before that, assessment basically means you will see in CA final, or the officer sends you a letter to inquire, etc. Any of this happens, whichever is earlier. So example, 31st December, assessment is not picked up, no problem. But if assessment picked up on 9 November, then till 9 November, only you have to time to file a belated return. Let's recap 139.4 along with the QuickBook. Here is 139.4. ROI can be filed belated anytime till 31st December of the assessment year or till the time of assessment, whichever is earlier. Consequences of late filing is lift. A late fee is discussed ahead here, 234F, 5,000 and 1,000. Interest, losses and tax. So this is almost half the chapter done. We are moving ahead to the next part of this chapter. So after filing the return belated, after understanding who needs to file the return, let's move ahead in this chapter. We're almost halfway through. Let's see what else is in store. But a little recap. As the chapter's name is called Return of Income. First, we needed to know who needs to file the return of income. 139.1, compulsory to file, coffee, business and profession, save tax, and all of that. By when do you need to file? John is another shortcut. Loss return, HD as another shortcut. Belated return, lift is another shortcut in belated return. Now, a lot of times when we send a message, we feel we should have changed it. But unfortunately, that option is not there in most messages. But guys, here there is an option. Once you filed your return of income, example, let's say you were supposed to file your return of income by 31st July, that was a due date. You filed it in June only, you were very proactive, good, but you forgot to take a deduction. Example, you forgot 80 TTA, 10,000 annually, savings bank interest deduction. You forgot to take it and you remembered it one day while taking a shower. Suddenly you realize that, listen, I've forgotten it. Can you go back and revise? Yes. It's basically okay to change your return. Change also, another word is revise. Revise is the word that you will use in the exam. You can revise your return as many number of times as you want. Every morning, wake up while taking shower, after brushing, go to the computer, change your return. No problem. Of course, if you ask a CA to do that, he will charge you money, but it's free. You can revise it as many number of times. What if it's a loss return? Still, it can be revised. What if it's a revised return? Still, it can be revised. In fact, this was a question in the exam very recently, that which all returns can be revised first. Can a return which is filed on time be revised? Yes. Can a return which is filed late be revised? Yes. Can a revised return be revised again? Yes. Can a loss return be revised? Everyone can change. That's a shortcut. So everyone and any return can be changed, but you cannot change after many, many years. You can only change till 31st December. Again, the same due date, yes. Or till assessment, whichever is earlier. Example, you filed a return in July or June, you want to revise it, no problem, but you can revise it only till 31st December. But what if they assess you before that? Then till the date of assessment, whichever is earlier. This is the concept of revised return. The section is 139.5 because on an average, people revise their return 5 times. That's just a way of remembering section 139.5. Guys, can you change yourself? Can you change your hairstyle? Can you change your sense of dressing, sense of talking? Yes, you can change everything. But one thing you can't change is your date of birth. Same way, in revised return also, you can revise return as many number of times, but the date will be the date you originally filed the return. So if the date is original filing was 30th June, it will remain 30th June, 5th July, then it will remain 5th July. That means a return file date will always be late. Yes. Now that you're understanding tax well, let me give you some small shortcut that we use practically. Example, a client came to our office on 31st July in the evening and he came running desperately wanting to file his return because he had made a loss. And you know, if loss we don't file the return on time, that loss will not be able to be set off. But we can't help him because it's almost the end of the day for us and we are very busy. So what we do is we just file a nil return or an empty return. and we give the date of 31st July. Basically, we file it just like that, empty. We file it, put his PAN number, basic details, and file it. Now, once we filed it, in the month of August, September, we revise it. We put the losses in it, and then we file it again. And the date will still be 31st July. Yes, so he can still carry forward his loss. Yes. Just some practical tip I'm giving you of what people do in case of desperate times. Guys, this is section 139.5. This is here, revised returns. Again, some questions from there on revised returns. Moving ahead. Perfect. So we've done more or less the main sections. Now come the section which says that once you file your return, someone needs to verify it. Example, a check. A check, unless it's signed, is not valid. Same way, guys, a return also has to be verified. And who can verify the return is the important question. So verification of return is a very simple concept, but someone needs to verify it. Now, how do you verify it? You can either sign it offline, or you can do an Aadhaar OTP, or you can basically have a digital signature. They will not ask you this, but I'm just telling you there are many different ways to verify a return. Verify means someone needs to give their signature. But who verifies it? Very simple. If an individual is verifying, if it's an individual's return, then the individual himself has to verify. And if he is not there, any authorized representative. Not there means he's gone abroad or something like that. If it's a HUF, then the Karta. If the Karta is not there, then any co-partners, male, female, any, yes, any. And if all of them are not there, let's say gone for a family holiday, then authorized representative. Next, partnership firm, the managing partner, the main partner. Or if he not there, then any partner. And if all of them have gone for an offsite, then authorized person, representative. Same with LLP, designated partner, or then any other partner. And if all of them are not there, then authorized representative. For a company, any guesses? Managing director, or then any director. And if all of them are not there, then authorized representative. Basically, this is the list. Remember the first main person. If he is not there, then other persons, and then everyone else. But for a company, can shareholders? No. Shareholders can. You can't do it for Mukesh Ambani. You cannot be verifying Reliance's return. So this is verification of return. I'm just reading it out from the quick book. Here we go. The person concerned or any legal representative authorized person needs to file verified. But by the way, if you authorize someone, then you have to give a power of attorney, and that power of attorney has to be attached with the return so that the government knows whom you've authorized. All right. Next. Guys, I'm filing my return of income. It's the month of June, July. I'm filing my return of income, but do I have to give all the expenses like electricity bill, petrol expenses, etc.? No. They don't read any attachments. You need to keep them with you. In case the officer sends you a letter, you need to show it to him. Otherwise, you don't need to have any attachments, except the returns has to be along with the books of accounts. Example, if you remember, if you are maintaining a balance sheet, a P&L account, a cash flow statement, etc., then those need to be attached. That is, if you are maintaining accounts under a section called 44A, arrange accounts, which we have done in a chapter called PGPP. So if you are supposed to maintain books of accounts, copies of these books of accounts need to be attached along with filing return of income. But if 44A does not apply to you, that means you're a very, very small person and 44A does not apply to you, then you don't need to give all this books of accounts. You just need to give details of your turnover. How much did you sell? What is your gross profit? What is your operating profit? What is your stock that you have in your hand, etc. These are the details that you need to give. So depending on whether you need to arrange accounts or not, you need to give these details. And obviously, you need to verify the return as well. So this is another question or a concept that we've just discussed. Here we go. 139.6a, particulars to be filed along with return of income. P&L, balance sheet, audit report to be filed along, else ROI will be considered defective. And if books of accounts are not maintained, then details like turnover, gross profit, expenses, net profit to be given, plus debtors, creditors, stock, cash balances to be given. Otherwise, the return of income will be considered defective. Now, guys, you filed your return on time, everything was good, but you did not verify it, unfortunately. Or you did not attach any of these things that you were supposed to attach. Attach means online only. If something of this comes to the notice of the officer, then he will tell you that, listen, this is a defective return. So once you file your return, Immediately in a few days, you'll get an email saying that, listen, this is a defective return. You'll get an email and your CA will also get it. And that defect has to be corrected within a period of 15 days. From the day you get the intimation, 15 days, you need to correct it. Generally, it's very easy to correct it. Either verification or some detail has to be given. If you're not in 15 days, not possible because you're out of town or some other reason, then it can be extended. And that extension has to be given by the other officer. And if that is not corrected, even after that period, then unfortunately, this will be considered an invalid return. Invalid means a return that you've not filed. Typically in India, people make 9 mistakes or 9 defects. Why am I saying that? Because the section is 139.9. Let's recap the last few very simple sections. So one of them said about 139.5, can you revise your return? Yes, anyone can change, if you remember that, till 31st December or assessment. Then we saw this section is not important, so I'm not telling you, but you need to attach some documents. If you don't attach, it will be defective. You need to verify it, that means sign it. If you don't verify it, again, it will be defective. And in the end, if it's defective, you need to correct the defect within 15 days or the time extension allowed to you. I'm just reading it. If ROI is not supplemented along with details, then it would be considered as defective. Defect to be corrected within 15 days from the intimation, else ROI would be considered invalid. Non-payment, yes, this I forgot. Now, I told you I was supposed to pay 30,000 rupees tax after TDS, TCS, advance tax to the government. I filed my return of income, but I did not pay that tax. Is that okay? It's almost like a relative giving you an empty envelope. In GST, it is not okay. But in DT, because you have paid advance tax, TDS, TCS, the government is okay. So when you file a return of income without paying tax, this will not be considered as a defect. Remember, guys, in GST, if you don't put money and file your GST return, it's invalid. But here it's valid. The logic is in GST, there is no TDS, TCS, advance tax, but here there is. All right, persons to verify return. As you can see, we are almost reaching the end of it. This is where it will end. Very, very simple things now. We are almost here. There is page 65 and some part of 66 that is left. Okay. Now, guys, as you know, when you file your return of income, example, when you write your CA exams, you need to give a roll number so they know who you are. Same way, you need to get your Aadhaar and PAN attached. So 139A talks about PAN, permanent account number. So when you're filing a return of income, you need to have a PAN number. If you don't have one, please get one. If your turnover crosses a certain limit, if in profession your income crosses a certain limit, if you're doing some transactions, which I will give you a list of, then you need to have a PAN. And if you don't have a PAN, please apply. That is not an excuse of not filing a return. And worst case, even the tax officer, if he feels that considering the business that you are or the transactions you are doing, he can also allot you a PAN number. So this is PAN. And when you file a return of income, it's almost like writing your roll number in your exam. You need to mention your PAN number. Otherwise, you can't file your return of income. So turnover, professional income above a certain limit, and some transactions. Now, what are these transactions, guys? Transactions where the amount is more than 50,000 rupees. That is a general statement. Yes, general statement. Example, you're buying mutual funds more than 50,000, paying life insurance premium more than 50,000. So this 50,000 is a general limit, but there are certain exceptions. When you're buying a car or a motorcycle, then there is no limit. You need to quote your PAN number. If you're buying a house property, land, house, office, then you definitely need to quote a PAN number, no 50,000 limit. If you're applying for a credit card, if you're applying for a demat account, again, you need to file, you need to get a PAN number. So there are some cases where there is no amount restriction. For goods, example, jewelry, if you buy more than 2 lakhs, so here the limit is slightly different. And for hotel industry, and for travel, if you're paying more than 50,000 only here, but if you're paying in cash only, then you need to give your PAN number. So these are the times when you need to quote your PAN number. I'm giving you some examples. You tell me, will you quote your PAN number? You, for your birthday party, went to a hotel, your bill was 22,000. Do you need to quote your PAN number? No. 52,000? No. But 52,000 in cash? Yes. Travel also, more than 50,000 in cash. Goods more than 2 lakh. Demat, credit card, house property. These are some of the examples without any limit. And otherwise, like life insurance premium, mutual funds, etc., more than 50,000, you need to quote also and get first and then quote your PAN number. I'm just reading it from your persons required to file ROI or persons having gross sales turnover more than 5 lakhs or entering into financial transaction of more than 2.5 lakhs or need to basically have a PAN number. Also, PAN is required for the following: cash deposit in banks more than 20 lakhs. Yes, this is a recent amendment, but these are just basically major transactions for which you will need a PAN number. If you want to deposit cash more than 20 lakhs in a year, or withdraw more than 20 lakhs cash in a year, or open a current account. Even the assessing officer may allot a PAN to the assessee. Please refer to the module for list when PAN is required to be coded. I've given a general idea. It is to be coded for transactions above 50,000 subject to exceptions. Important ones: purchase of vehicle, opening bank account except basic accounts, debit or credit card applying for it, DMAT, hotel, foreign travel more than 50,000 in cash, FD more than 50,000, LIC more than 50,000, securities more than 1 lakh, immovable property more than 10 lakhs, and sale of goods, example jewelry, etc., more than 2 lakhs. In all these cases, you will have to quote your PAN. So if you go to Tanishq and you buy a jewelry worth 1 lakh 80, no problem. But 2 lakh 80, they will ask for your PAN. If you don't, then there is a penalty of 10,000 rupees. This is PAN. It's almost like your roll number in your exam. And PAN was there for a long time. And then came another number similar to PAN, another number. And the government said, listen, that number also now most of you have. So why don't you link both of them? So this is the Aadhaar number. And now your PAN and Aadhaar has to be linked. That means PAN number is already there on the income tax website. You need to now link it to your Aadhaar. So the government should know whose PAN and whose Aadhaar is linked and it together. Now, of course, in India, when government tells you to do something, you ignore it unless and until the government puts a fine. So they said, please link Aadhaar and PAN. People did not do it. They again said, please, please. They said, please in capitals. People did not do it. Finally, they said, listen, if you don't attach your PAN and Aadhaar, I will charge you a fee of 1,000 rupees. Plus, I will make your PAN inoperative. That means you cannot use your PAN number at all. And the moment they put a fee on it, example, if the traffic cops in Bangalore and Mumbai say that, listen, wear helmet compulsory, no one listens. But wear helmet, if found without a helmet, you will be fined 500 rupees. Everyone will start buying helmets, the one that look like caps also, but they will wear it. So they made a section called 234H. Shortcut is home because Aadhaar is proof of your home. So they said you need to give the details by 31st March 2022. If you don't link your PAN and Aadhaar, then from 1st July 2023, they will make your PAN inoperative and you need to also pay a fine of 1,000 rupees. Once you pay a fine of 1,000 rupees, then within 30 days, they will again make your PAN operative. But this does not apply to some people, and the some people are 80 non-residents who are doing some jam. People who are 80 years or more, non-residents and non-citizens of India, and people who stay in Jammu and Kashmir, Assam and Meghalaya. These are the people who are not subject to this 234H or the PAN become inoperative. Let's read it from here. 234H, Home Aadhaar, where a person who is required to intimate his Aadhaar number fails to do so or on before the notified date of 31st March 2022, he shall be liable to pay a fee of 1,000 rupees. Once you paid your 1,000 rupees fine, the PAN would become operative within 30 days. This is not subject to 80 non-residents jam. All right, as you can see, we're almost ending there. So two things, PAN and Aadhaar now need to be a part of your return of income. All right, so after the PAN and Aadhaar linking and 234H, we now move ahead. So is return filing expensive? Yes. If you go to a CA, he can charge you a good amount of money to file a return. And hence the government said, listen, why not train some people who are non-CAs to become these tax return preparers? So they introduced a certain set of people and now they are called tax return preparers, TRPs. What are these people? They're basically people who are trained to prepare and file your tax returns to help you do that. And they can be used by you, me, anyone, but anyone who's a small fish. So this cannot be used by big fish. Basically, that means people who are subject to audit cannot go to them for filing a return. And who can be TRPs? Anyone who's an Indian citizen of sound mind, not insolvent, all that common things. But the following four people cannot be TRPs. Who are they? First, anyone who's a CA. If you're a CA, why would you want to be a TRP? It's almost like a doctor wanting to be a compounder. Next, anyone who's a lawyer. If again you're a lawyer, why would you want to be a TRP? You can anyways file returns for people. Yes, the return filing can be done by anyone. Audit, you need a CA degree. Next, people who are working in big organizations are okay. But if you work in small organizations or small companies, that is private companies, then if you are working in a private company, then you cannot file people's TRP, you cannot be a TRP for people. And if you're a bank employee, then you cannot be a TRP for a client of yours. Example, you work at ICICI Bank and you are also a TRP on the side. On weekends, you file people's tax returns. You can file for other people, but not for your customers of ICICI Bank. So these are 4 people who cannot be TRPs. This could be a good question. Who are TRPs? People who've got a badge which says TRP. Why the shortcut? Because the section is 139B. TRPs is batch. They help you people file the file returns. They are only for people who are small fish. They cannot be subject to people who are audit. And these 4 people, CAs, lawyers, people who work in small companies, because small companies could lead to some fraudulent transactions. And if you're a banker and with your clients, you cannot be a TRP. So this is the concept of a TRP, just showing you the TRP concept from here. Here, auditable persons can't use TRPs. Officers of banks with assessees have relations. Lawyers, CAs, employees of other than companies cannot be TRPs. So basically, big companies can be TRP, otherwise you cannot be TRPs. All right, so now we move to self-assessment tax. So what is this self-assessment tax? It's a very simple thing. My total tax liability was 1 lakh. Out of that, TDS 30,000, TCS 30,000, or TDS 30, TCS 20, and advance tax 10 has already been paid to the government. So 60,000 already paid. I yet have to pay 40,000, which I will pay when I file my self-assessment tax or when I file my return. This tax is called self-assessment tax. After TDS, after TCS, after advance tax, whatever tax remains to be paid is called self-assessment tax. When do you pay it? Whenever you file your return of income. And paid soon, because on this you'll have to pay interest under 234C also, 234B also, and if you file your return belated, 234A also. We've just discussed CBNA. I'm not discussing it again, but remember, this is your self-assessment tax. So 40,000 is what you needed to pay. Now it's a very interesting conversation. Tax you needed to pay was 40,000 rupees. On that, so let's say interest you had to pay was 8,000 rupees. And you had to pay a late fee of, let's say, 1,000 rupees. So totally you had to pay 49,000 rupees to the government. By filing your return, you said 49,000, but you paid only 30,000 rupees. Now, how will that be adjusted? So it will be adjusted in the manner of fit. It's very smart. I'll tell you how it's adjusted. First, the fees will be adjusted. So out of 30,000, 1,000 fees will be adjusted. Then next interest will be adjusted, 8,000, so 9,000 totally gone. And the remaining 21,000 will be tax adjusted. So basically you still have to pay more tax. Yes. This is a very smart way. In fact, this way has been taken from Marwadi businessmen or Marwadi money lenders, that first they take the fees or the interest and then they adjust it towards the tax amount. This is how this fit is adjusted. I hope you understood this. This is what is written here. In case of shortfall on payment of tax, the amount paid shall be first adjusted against fees, then adjusted against interest, and last against tax payable. The shortcut is fit. Guys, this was the concept. Now time for some amendment. So this chapter, before we move to the questions, I was going very smooth, but there was some amendment, which is now something that I want to discuss. This is very highly probable for a May 24 paper. Now let's say, what is this adjustment? So you had some incomes. Let's say you're a businessman and you have other incomes and you decided to file your return of income. And let's take for previous year 23-24. You had to file it in assessment year 24-25 and you filed it, let's put a random date, 5th July. So you filed it on time, everything was good. You paid your tax, you paid your interest, everything. Life was nice. Then you visited Bangalore and you went to the Art of Living course, Sri Ravi Shankar. And the course was so beautiful. You were really a changed person after you did that course. And once you finished that course, you realize that while you filed your return of income all good, there were certain things that you hidden from the government. Now a sudden realization has happened that you need to now disclose it to the government, either because of art of living or because maybe you feel that someday the government will catch you and then you'll have to pay penalties, etc. So you want to come out clean. But you cannot do anything because 31st December has already gone by, so you cannot revise your return. If you remember, you can revise it. 139(5) allows you to revise it, but only till 31st December, and let's say that is over. Then what do you do? Actually, you could not do anything. You would just wait for the officer to catch you. But now you have an option. The government has come up with something called updated return. They say that don't worry, if you want to update your return even after 31st December, we'll allow you. So after the assessment year gets over, let's say the assessment year is 24-25. After that, we will give you 24 months. We will give you 2 years, that is 24 months after assessment year 24-25. And these 24 months, which is a long period of time, you can update your return, no problem with that. If you file your return, you can update it. If you've not filed, then file fresh, no problem at all. So you get additional time. Yes, you get a lot of additional time to do this. So 24 months, can I file my return? Yes, it's called an updated return. The section I will tell you. So if your assessment year is still over, still there is a chance for filing an updated return. But the government is very smart. This return, you cannot reduce your income. No, sorry. You cannot do that. You cannot increase your losses. No. You can't even do that. You cannot increase your refund of tax. No. So basically, you cannot do anything that helps you. You can only do some things that will help the tax department. That means you can increase the income, thumbs up. You can increase the losses, no. You can reduce the losses, yes. You can reduce the refund, yes. You can increase your tax liability, all that is yes. Now, why will someone do that? So I'll tell you why will someone do that. Because if you don't do it and the government catches you, then there will be 300% penalty, which you will see at CA fine. So to avoid that penalty, they said that you can file an updated return. So example, you filed your return on time. Then you had some 5 lakhs of extra income that you wanted to show. So you showed this extra income. Can you do that? Updated return? Yes. On that, will you have to pay some tax? Yes. Will you have to pay some interest? Yes. So on that, let's say tax is just keeping some random numbers. 50,000 rupees is the tax and 5,000 rupees is the interest, or let's say 10,000 rupees is the interest. This is what you have to pay on this excess income. Simple. Again, repeating, updated return. What is the timeline? 24 months. In that, you have to pay, disclose income. You basically have to do something that helps the government earn more money. And on that, you'll have to pay your tax and your interest. Interest is under 234A because this is pending since really, really long. Now, then, what is the government aiming? The government has a couple of aims here. First, people who want to go clean and disclose more incomes, you can do that. But second, the government says we will take an additional tax on it. So on this updated return, you'll need to pay an additional tax. What is additional tax? Example, you're paying tax of 50,000, interest of 10,000, 60,000. On top of that, you need to pay 25% additional tax. Yes, you heard it right. So 60,000 into 25%. This, if you file your updated return in the first 12 months. And if you file it after 12 months, till 24 months, because you can file it till 24 months, you need to pay 50% additional tax. Let's take numbers. So example, if you file, you need to pay 60 nonetheless. On 60, if you file it in the first 12 months, you need to pay additional tax. Yes. So additional tax is always there. Yes, an updated return. First, for the first 12 months, you need to pay 25% and after that 50%. So basically that means if you file after 12 months on 60,000, you'll have to pay 30,000 more tax. Yes, that's called additional tax. Just reading it and putting the sections also. 139(8)A updated return can now be filed within 24 months, that is 2 years from the end of the assessment year. This can be done whether a return of income has been filed or not. The same cannot be filed to increase the losses. No. Increase refund. No. Increase reduce income. No. That is, it has to be updated for the benefit of the government. Cannot be filed. Yes. If you've already updated the return already once, then you cannot update it again. And or if your matter has been assessment, then you cannot file an updated return. Additional tax is 25% of the tax and interest, and it can become 50% after 12 months. Guys, this is your chapter called return of income. We're done with all the concepts. After these concepts, now the only thing that is left are all the sums. So we will now move towards the sums. So here we go, just checking the sections. Return of income. 139.1 says who needs to file. Coffee, remember, business and profession save tax. 139.3 loss return, remember HD. 139.3 also lift, if you remember. Sorry, 139.4 is a belated return. In this, there is lift. 139.5 revised return, you can revise as many number of times. 139.6 a not very important, cancelling it. These are some documents, sorry, some returns attachments that you need to file. 139.9 is defective return. You should know who is to verify the return. 139B is batch, that tax return preparer batch. 139A is PAN number. 139AA is Aadhaar number. 234F is that fee of late payment, 5,000. Late filing 5,000 can be reduced to 1,000 also. 234H is if you don't link your PAN and Aadhaar, 234H. Now important is 139.8A because this is the updated return. I'm just showing it to you. And 140B is the additional tax that you need to pay. Some sections that you can remember. All right. And now over to the sums. We have back-to-back sums, which we're going to do now. All right, it's a good time to move over to the questions. First, we will attack all the ICAI material questions. Once we're done with those, then we will go towards the exam questions. Everything will be covered here. So watch out. Here we go. Use the handwritten notes. The handwritten notes might not have the updated return, which you can use from the quick book. But otherwise, everything else will be here. All right. I'm opening the ICAI material now. Here is the return of income. First, let's do the question and then we'll go back and do the illustrations as well. Yes. Let's start. State with reasons whether you agree or disagree with the following statements. The return of income of LLP could be verified by any partner. This is not correct. The return of income of an LLP has to be verified by the designated partner. If the designated partner is not there, then by any other partner. And if all of them are not there, then by an authorized representative. The time limit for filing return of income in the case of Mr. A having a turnover of 160 lakhs, that is 1.6 crores, including 100 lakhs, that is 1 crore received in cash for the year ended 31st March 2024, whether or not declaring presumptive income is 31st October. So they're saying that Mr. A will always have 31st October as his due date. Let's check. Mr. A, can he go under presumptive tax? Remember 44 AD. If you have a business up to 2 crore turnover, then you can go under presumptive. And presumptive, you don't need to go for an audit, so you're not a big fish. Then in that case, your return filing due date is 31st July. So the first answer or the first part of the question is that if Mr. A chooses the presumptive scheme under section 44 AD, he will not be required to audit his books of accounts. In that case, due date will be 31st July. The second part will be, in case Mr. A does not offer presumptive taxation, he will be required to be subject to an audit because the audit limit is 1 crore. The 10 crore limit will not apply to him because he has a lot of cash transactions. So in that case, his due date will become 31st October. So this statement which says that there's only one due date is incorrect. Mr. Vineet exercised the option of shifting out of the default tax regime. As you know, there's a new default tax regime, which is 115 BAC, which we've done in rates of taxes. And he's come out of that regime. That's okay. It's like Zomato and Swiggy. You can always come out of it. And he's basically filed it under the regular scheme or the optional scheme. He has income under salaries, income from house property, and bank interest. On 21st of December of 2024, he realized that he has not taken a reduction under 80 TTA and wants to revise his return of income. Can he do so? Yes, section 139(5) allows Mr. Vineet to revise his return up to 31st December or till assessment, whichever is earlier. So can he revise it? Yes. Would your answer be different if you discovered it on 21st March 2025? Sorry, you can't do that. But guys, here, can you file updated return? Not even that, because it will reduce his income and that the government does not allow. Next, examine the reason whether the following statements are true or false. The assessing officer has the power to allot PAN to any person. Yes, considering the nature of transactions, the assessing officer can allot a PAN number to a person. Whether Karta of the HUF is absent from India, the return of income can be verified by any member of the family. Yes. Any male member? No. So this is a wrong statement because of this word called male member. Explain the term return of loss under the Income Tax Act. Can the loss be carried forward even if return of loss has not been filed? Section 139(3) says that any return in which there is a loss will be called a return of loss. As per Section 139(3) and Section 80, in case there are losses and the return is not filed by the due date, the said losses will not be allowed to be carried forward. Set off you can do, but that year's losses cannot be carried forward. There are two exceptions. One is loss from house property and second is unabsorbed depreciation. Next, Mr. Akash is undertaking certain transactions during the year. You are required to identify the transaction in respect of which he will have to quote his PAN mandatory. Payment of life insurance premium 45,000. No, the limit is 50. General limit, is 50,000. Payment of 1 lakh to a 5-star hotel in cash 60,000. Yes, because cash more than 50,000 to a hotel, you need to give your PAN number. 80,000 ECS through bank account for acquiring debentures. Debentures of an Indian company, securities. Yes, more than 50,000, you need to quote your PAN. 95,000 Thomas Cook for travel to Dubai for 3 days. No, because it's not in cash. Only more than 50,000 for travel or hotel in cash. Applied for a credit card. Yes, you need to quote your PAN number. This is all the sums. Now let's move ahead to the illustrations. Again, where do you find these? This is ICAI material. You can find them in the same link for all my students. The same link will have all this. Otherwise, you can just open your ICAI material and move towards the illustrations. Paras, who's 55 years, is a resident of India. During the year, interest is 2,88,000 from his NRE account, which is exempt, by the way. 30,000 is interest on SBI fixed deposit, and his saving bank account interest is also there, 3,000. So basically 30 plus 3, 33,000. Why not 2,88,000? Because that is exempt. So only 33,000 rupees is his income. Is Paras required to file his return of income? No. But will your answer be different if he has incurred 3 lakh as travel expenditure on self and spouse to the US? Yes. Foreign travel, remember, coffee more than 2 lakh, he will be subject to filing return of income. Next. Explain with brief reasons whether the return of income can be revised. The same question came in the exam. I'll show you that paper also. But this, which can income return can be revised. So first you'll write, because it's a 3-4 mark question. So you will write that as per section 139(5), a return can be revised for any mistakes or any corrections that can be done up to earlier the following 2 dates. First is 31st December of the assessment year or assessment, whichever is earlier. And now belated return, which is filed belated. If you filed a late return, can that also be revised? Yes, a belated return also can be revised, but again, the same dates. Return already revised. Yes, there is no limit to the number of revision, and hence a revised return can again be revised. Return of loss. Yes, a return of loss can also be revised, but the original date will apply. The date does not change. These are highlights, are some things that you can read if you want to use the ICAI material. I would not suggest you use. Just do what I'm telling you to do and do the sums from the ICAI material as well. Voting, there's a question here as well. Mrs. Hetal, an individual engaged in the business of beauty parlor, has got her books of accounts for the financial year audited under section 44AB. That means she's a big fish. Her total income is 6,35,000. She wants to furnish her return of income through a tax return preparer. As 139B says, tax return preparers can help file return of taxes, but they cannot help people who are subject to an audit. So Hetal cannot go to a tax return preparer. That's it. These are the questions. Now let's go over to the RTP and the exam questions. How do we know which questions to target? Here, guys, is the quick book. The quick book, after every concept, has a reference to exam questions. So here we go. I'll just show you how to use the quick book best. So here we go. This is the chapter return of income. Here ICAI illustration 1, which we've already done. Jan 21, question number 3P. Jan 21, question number 3P. So you don't have to struggle. Straight off, you can go to that question, question number 3P. Mr. Hari, who's 57 years, is a resident of India. He provides the following details. See, this question is very similar to ICAI question. Interest on NRE account, which is exempt. Interest on saving account, 8,000, which is taxable. Interest on FD, so income is 48,000. Is his income more than BEL? No. So does he have to file his return of income? No. Section 139(1). Will your answer be different if he incurred 4 lakh on travel expenses? Yes, because if it's more than 2 lakh rupees of travel expense, he needs to file his return of income. Next is RTP November 21. Here we go. RTP November 21. Question number 7. Mr. X is a working partner and Mr. Y is a non-working partner of a partnership firm. XYZ partnership firm is subject to a tax audit, basically means big fish. Then both the partners will have 31st October. So answer is B, 31st October for both Mr. X and Mr. Y. If you wanted to read it in detail, pause the page or pause the video, watch, read it in detail and answer it again. Moving ahead, ICAI question 4 is done. Illustration 2, question number 2 is done. RTP November 21, 15B. Can Mr. Raghuram file his return for the year 21-22 belatedly in the previous year 22-23? Yes, he can. If he has failed to file the said return, also specify the consequences of non-filing. Yes, he can file a belated return, but up to 31st December or assessment, whichever is earlier. And the consequences are 4. He'll have to lift. He'll have to pay a late fee under section 234F for 5,000 rupees. If the income is up to 5 lakh, then it's 1,000. Next, he will have to, the losses will not be allowed to be carried forward unless it's HD. Next, tax, self-assessment tax has to be paid and interest under section 234A will apply. Moving ahead. November 19, question 4C. Here we go, question number 4C. A, B, C. Elaborate the conditions non-fulfillment of which would render return of income not maintaining regular books of accounts defective. If you're not maintaining regular books of accounts, then you need to give details of your turnover, gross profit, expenses, net profit, cash on hand, stock, debtors, etc. Also, we need to verify a return of income. If this is not done, then the return would be considered as defective, section 139(9). Let's see which other question is there. May 2019, 4B. This is the IDT part. 1 second. All right. Discuss the provision of section 139A PAN, which provides the persons who are compulsorily required to apply for a PAN number. People whose business turnover is more than 5 lakh, financial transactions more than 2.5 lakh, savings bank deposits of more than 20 lakhs, withdrawals more than 20 lakhs, that list, those are the people who are required to file or apply for a PAN number. This question now is not as important. Now, I'm just going to go to some random papers because this question comes every year, and let's check what are the recent papers. Let's open May 22. Yes. This is again a question on this chapter. Explain with brief reasons whether the return of income can be revised under section 139(5). Yes, in the following cases. Belated return, can it be revised? Yes. A return already revised, can it be revised again? Return of loss, can it be revised again? Yes. How do you answer this? First, explain 139(5), revised return. It can be revised, due dates, and then each of them write two lines. Due to some inconsistent information provided in the return of income, the assessing officer considers it defective. How the assessing officer would deal with the issue? He will send an intimation to correct the defect within a period of 15 days. If the defect is not rectified, what are the consequences? It will and time allowed. It will be considered as an invalid return. Specify the remedies available if not rectified within the time allowed by the assessing officer. You can ask for an extension of time, and the assessing officer may extend the time upon his discretion. So guys, typically at the end of every paper, including your paper that you will have in May 2024 and also November 2024, the same chapter is there as well. The last question number 4, the last part of 4 marks will be from this chapter. Watch this video whenever you want to actually revise. I have used the QuickBook, I have used notes, I have used ICAI material, and I have used question papers to discuss this chapter in great detail. This is a chapter called Return of Income. All the best and do well.